What's up, everybody? It's Another Crim Investments and Wellness back at you again with another video. In today's video, we're not going to be on the charts. I'm simply going to give you things I wish I knew and the steps I took to progress me a lot quicker in this trading journey. Because this is really what it's going to take. This skill can change your life. It can change your life. And it's a skill that doesn't require as much time as a lot of other skills, which pays you a lot more. But it's still going to take you some time. So let's get into this. Rule number uno: get a mentor. I cannot stress that enough. You're going to need somebody to take you through the fire that's already been through the fire, so you don't have to travel through such excruciating pain to get there. He can show you, or she can show you, easier routes on how to achieve what they've already achieved. Just like a drill instructor in the military, he's with all the military's soldiers, not gonna get a drill instructor that's never been there. They're not just gonna get Johnny. Apologize for your name, Johnny. I'm just saying the name, but any hoopla off the street to train them. They're gonna get somebody that's already been through the same things they've been through. Same thing with trading. Get a mentor. Rule number uno is gonna save you so much time and effort. Don't sit there and scroll through YouTube. Just trying to look for all because there's so much information out there, and having a mentor that's already done it is going to save you a lot of time and effort. So get a mentor. Rule number one. Number two, attitude. I cannot stress this enough. Psychology. Focus on psychology. Don't focus on so much. Trading is it takes time. You're not gonna get trading in a day or two. It takes a lot of time and a lot of back testing in these markets just to get a feel for the market. There's no strategy that's out there that somebody can learn in a week and be profitable for the rest of the time. If there is, I've never heard that before. So don't worry too much about the trade. Trading is going to take time, which leads me to actually step number 7. But it's going to take time. So focus on the psychology. Two main psychology books that I recommend is both by Mark Douglas, called Trading in the Zone and The Disciplined Trader, both by Mark Douglas. Highly recommend those two. And read them again over and over during your trading journey. It's going to help out a lot because for all the beginners out there, this is going to be the best. And this is the one of my mentors told me that this is the hardest, easiest money you'll ever make because you're going to change your whole way of thinking. You're going to change your whole livelihood on your overall thought process of looking at certain things. You're not going to be as fearful anymore. You're not going to be as egotistical. Your ego is going to get checked because in order to be a profitable trader, you have to change your fear of loss. You're going to have to change your greed. You're going to have to change your ego. You're going to really have to do some self-development, which is not the hardest thing to do. So it's almost like a therapy in a sense. But once you come out on the other side, you're not only going to be a better person, but you're going to be a better trader. So that's rule number 2. Rule number 3. Paper trade until you're profitable. I can't stress that enough. So paper trade, aka demo trading. Don't worry about the money. I know it's harder said than done because I made these same mistakes. Don't worry about the money. Just paper trade until you can bring in, I say, anywhere from 5 to 10% consistently. If you can get a year of you doing that month in month out, every month, January through December, if you can bring in 5 to 10% per month on a demo account, you're unstoppable. You already have the skill. You know what I'm saying? You can go to any funded account out here, and you can go to any bank out here if you can bring 5 to 10% a month consistently. Instead of going through all that money, thinking you're gonna try to get rid of the idea of trying to get rich quick. That's not going to happen. This is a skill that all we need is Wi-Fi for. That's powerful. Every other skill out there, you need to get something to give something to get something. Even if you're an entrepreneur, even if you're not a 9 to 5 person, you still have to rely on somebody. The only thing, we just have to rely on Wi-Fi, and if our computer and or if you're on your phone, whatever wireless device is working. That's all we have. We don't have to rely on anybody else to make us money. Well, we do. We need somebody on the other end of our trade, but there's always gonna be people trading in the market. So yeah, paper trade until you are profitable. 4, funded account, which leads to it just as a feed off each other. I personally recommend leveraging your personal account with the funded money. So get paid because you like I said, if you can bring in 5 to 10%, that passes any prop firm challenge out there per month. So if you can go ahead and get the challenge, get the verification, and then once you have that, you automatically get leveraged 100K instead of not too many people have just 100K out there just laying around out there for them to use. So leverage that and pay yourself towards your personal account. So every time you get a check, take a portion of that and send it to your personal account while you leverage the funded account. That's a step that would, because in that case you don't have to worry about the fickleness or rely on these prop firm companies, because we've already seen one go down. I'm not going to name any names, but and this very well could happen again. We never know the background things of these things. So definitely leverage it, and then feed your personal account. Number 5, have a set take profit and a set stop loss. I did see my Forex funds come out with some stats on like, I think it said 80% of people don't have stop loss. That's crazy. That is good. That tells you, right. So just by having a stop loss, you're a better trader than 80% of the people. And have a set stop loss and a set take profit. My set stop loss is meaning it can either be by pip or by structure. Mine's always by structure, but what I mean is it's always a 3-to-1 risk to reward ratio. So now I can change that, add on to that, just say AKA let's say same R and R. Alright. So I have a set take profit and a set stop loss always. So same R to R. My R to R is always a 3-to-1. So my profit target is always 3 times more than what I'm willing to risk. Always. So by having this thing set, you're not going to mess up, because trading is a probability game. So by you using different, say for instance, you want to go to 2-to-1 right here, or 1-to-1 right here, to 3-to-1 right here, it's going to mess each, say that's 3 different trades. It's going to mess your probability game up, because it's all probabilities at the end of the day. And then and that takes the emotion out of it. So a lot of people would have 2 or 3 losses in a row, and then they'll reduce their risk, or they'll start taking profit early. I know a lot of people probably heard this before, but cut your losses short, let your winners run, because your winners in the long run are gonna be cushion for your streak of losers in the future, because it's gonna happen. Your streak of losers are going to happen, but those big winners is gonna cushion that, so it's not too hard on you. So but it's so hard when you're in the moment, because you've already took those 2 or 3 losses. Like, I'm just gonna take my profit because I'm trying to bag some profit. But I'm telling you that profit's not going to matter, because you're gonna continue to trade, and you're gonna have a streak of losses, which is gonna wipe all that out. So you're gonna need to have those big runners. So have a consistent take profit and stop loss, and AKA have a consistent risk to reward. Whatever your risk to reward is, 1-to-1, 2-to-1, 3-to-1. Mine's personally 3-to-1. Have that, leave it, and see by that. Even if you're going for, let's say, any prop firm challenge, the standards out there roughly around 8 to 10. So let's just say 10. So, let's say 10. So, one trade, 3% up. One trade, 6% up. Another trade, 9% up. Take a L, 8% down. Take another L, 7% down. Another trade, 10%. You see what I'm saying? It doesn't. That's it's 4 or 5 trades. I can't remember right now, but that's all. You would have passed the challenge off the 4 or 5 trades, and that's it. A lot of people trade a million times, but if you have that same R to R, thinking they're going to catch the big ones and letting runners run, just take it. It's because it's a probability game at the end of the day. So having that is going to be a game changer. Having that same R to R and same percentage. So that kind of leads off the R and R. So rule number 6, use the same percent. I hope y'all are writing all this down and kind of taking notes as I go. You definitely should be, because I know writing it down, even though you may not think of it, but subconsciously it helps it stick into your brain. So I definitely recommend doing that. I need to add something else on here too. Um, I'll add it after this, because this is very important too. All right, so use the same percentage per trade. So I always risk 1% per trade. 1% per trade. Some people have different opinions on this. You get down a bit, start using 0.5, get up a bit, start using 1%. No, use 1%, whatever that risk reward is, because like it's gonna mess up your probabilities at the end of the day. If you're using 1% here, 0.5% here, 0.2% here, 2% here, it's gonna mess up your R to R, and you don't know which ones are going to win. That's another thing. A lot of people will adjust with the money that they're risking based on how they feel off the trade. But you can't bring emotions into this game because it doesn't care about your feelings. You can't be like, oh, I feel this trade is gonna go up. That doesn't exist in the market. It took a while for me to understand that, so that's why it's so important for you to put the same percentage per trade. Whatever you're willing to risk per trade, have that same thing every trade, and have a set R to R every trade. So me personally, I'm risking 1%, going at least a 3-to-1. So if I'm on a 100K account, that's 1,000 going for 3,000 every time. Let's go. And I already forgot what I was going to put on. Soon went ahead and put it down because that's definitely forgot what I was going to say. But definitely enjoy the process. I like I know for me, I thought I was going to be funded and be trading thousands of dollars, within 6 months, 5 months, because that's all you see in this industry. You only see the ups. You only see people making a lot of money in this industry, which is a shame because it takes a lot of work. It takes a lot of work to be good at this. It takes a lot of time, a lot of dedication, a lot of effort, a lot of self-reflection to get to being a profitable trader. And a lot of people underestimate that because it's shown as such a glamorous thing. So definitely enjoy the process and enjoy everything about it, because like I said, once you have this skill, it's gonna take you far. It's gonna take you very far. And it's a skill that nobody can take away from you, like I said. But I'm trying to think of number 8, but I forgot it. I might add it in like as a sample if I do remember it. But definitely, I'm gonna end y'all with this. Like one of my mentors told me, be connected to everything, but attached to nothing. Write that down. Be connected to everything, but attached to nothing. Go ahead and write that down. And it's pretty self-explanatory. So yeah, I kind of want y'all to tell me what that means in the comments below. Tell me what y'all think that means in the comments below. And we can do a whole psychology. I'll start making psychology videos because that's a big part of trading. But definitely. So I hope y'all enjoyed this video. These are steps that I have taken, and then steps that I didn't take that I wish I would have taken. Because these are definitely things that's going to progress you for. Oh, I remembered. Step 8. Master one pair. Master one pair. I can't stress this enough. Because a lot of people get impatient. Practice patience. That's another emotion that you need to practice in this trading game. Just because your pair or setup doesn't have, or you're not getting a setup every day, doesn't mean you won't be a profitable trader. Matter of fact, the more I found that I overtraded, the less profitable I became, and the less trades say for instance I make 4 to 6 trades a week compared to what I was usually trading, about 20 trades a week. I was a lot less profitable back then compared to just taking the high probability setups off of a pair that I've mastered. And when I mean mastered, I mean somebody could tell you the price and right when you wake up and you know the price, without even looking at the chart, because you know exactly where this pair is going, and which is a very big upper hand in a game that you're always trying to beat somebody at. So mastering one pair, don't jump from pair to pair or from a market to market. Either you're gonna stick to forex, stick to forex. You're gonna trade commodities, trade commodities. You're gonna trade futures, trade futures. Well, now within those, if you're gonna trade forex, stick to one pair. If you're gonna trade GBP, EU, trade just those pairs. If you're gonna trade commodities, just trade gold. You know what I'm saying? If you're gonna trade futures, trade the SP Mini. You know what I'm saying? Just pick one market, one pair, and master it. Master it. I'm talking about back test years of material if you can. Years of material. But appreciate y'all. Hope y'all enjoyed this video. Cornell Creme is out.